Okay. So once again, disclaimer. Every single meeting because I don't want to get sued. So everything here is opinionated, and I'm just here to provide information. I'm not responsible with money. So yeah, just quick disclaimer. And our icebreaker. So what did it explain?
All right, we're gonna have an icebreaker for this session. It's gonna be a Would You Rather series. So we're gonna move on to the first one.
Yeah.
Alright, so the first Would You Rather. So I say we can either pick people to like give us what they think, or we can do a show of hands. So we're gonna start. I'm just gonna start picking people.
Or
So-
just yell out what you
Yeah.
what you think. So would you rather see in the future or travel back to the past? Anyone, just throw your answers.
Pass.
Travel back to the
Pass.
past.
Future.
Who would rather see in the future? And once you explain why, like the reason. Oh,
So, if I died like next year, I would do that and I would live like my best life.
okay, fair enough. Okay, who thinks they would rather travel back to the past? Okay, who wants to explain?
I got. Because you can undo mistakes you've done in the past.
Okay. Alright, so next question.
Alright, would you rather eat only cheese for a year or not be able to eat cheese for a year?
Not each
I'm sorry. I didn't have any idea.
like cats and dogs.
Like a lot of people okay. Is there anyone who would actually rather eat
No.
No, okay. Alright, next question.
Alright, would you rather have an infinite battery life or free strong Wi-Fi everywhere you
You can always have your battery life as long as you have a portable charger, but it's impossible to always have strong Wi-Fi. It's impossible.
Alright, last one. Alright, would you rather be able to talk with any animal or speak all foreign languages? No! I want to talk to my dog. I'm like a bite size.
Who would rather be
I'm not small, I'm fun size.
Who would rather be able to talk to animals? Who would want to explain why? Like the reason. What?
Because I want to tell my dog hi.
Okay.
Or,
talk with an animal because like it's cool, you know? Okay. Why does he go for this? Why? Alright. Okay, we're gonna move on to the actual content of today's video.
Are you like a dog?
Also, just an FYI guys, if you access that QR code or that link, it brings you to the attendance sheet. So if you don't see your name on the attendance sheet and you know you've been to this meeting or last meeting, please let us know and we can help fix that issue.
Yeah.
Thank you for the nice
Okay, so everyone please check right now. If you were here at last meeting, check if your name is up.
Can you check? Can you open the That's actually a good one. Okay, thank you.
Looks like we're good, so we are going to be Okay, so
And my name is on the sheet.
okay, did you go before?
No.
That's why. Okay, so for the people who didn't come last time, what did we talk about? Like anything.
Apple stocks.
What about Apple stocks?
The continual rise in Apple stock.
Yeah, okay. What else?
What makes up the company?
Good. What else?
Oh, my president.
Any main points?
Apple's successful because they're innovative.
Yep, we talked about why their demand was so high. Yeah. Any other ideas? Spurt good about.
Robin Hood.
Okay, we are actually going to touch on that today. So, yeah, those are some main ones. Yeah, so those were just basically copy pastes from last meeting's slides. So those are what we covered last meeting. So just take a look at that. So again, here we go. So our agenda first, we're actually going to explore some terms, some technical terms like I promised last time. Then we'll talk about what indexes are. Also, we mentioned that last week a little bit. Brokerages, and finally, our little tip and our final activity to add also forgot to do last week.
Well, I have a question.
Yes.
So you want to spread the open?
You can. I mean, this is just kind of like a fun thought.
So you're going to go over some terms first, right?
Yeah. So if you want to take notes, you are free to do so. But yeah.
Alright, everybody, so clear attention to Andy, we're going to start the terms now.
Thank you.
Okay, so I mentioned this last week, and some of you guys are a little bit confused, so I apologize for that. So, what is a blue chip company? Essentially, it is a company that is extremely reliable and has a really good reputation in the stock market. And generally, they grow within like basically any circumstance. So, some examples is Johnson & Johnson and Disney. And can you guys mention any other possible companies that can be like considered as blue chip companies? Yes.
Microsoft?
Yep. Go ahead.
Amazon?
Yep. Yep. Tesla. Yep.
Google.
Yep. See, you guys got the joke. So those are all blue chip companies. So they are extremely reliable and they used to be very
Right here it's
That's
recording.
our first story.
Right, so yeah. All right.
Very reliable. Okay, so we're gonna move on to our next term. Okay, so for these terms,
Yeah. Okay, so before we look at the rest of these terms, if you guys can just pull up any stock on your phone, like just on Google. The example that we're using up there, we're just going to be using Apple.
yeah, so you can pull up any stock. I just want you guys to follow along with these because I will be doing a little activity after, and I do want you guys to understand all these terms. So just pull up any stocks. There's nothing cool. You'll see like this basic chart here with all of these. These are the stuff we're gonna. So I'll give you guys a second for that.
I don't have internet.
Ethan, just shut up and participate.
You should same for the camera.
We're
I'm just trying to
both.
do it and get it somewhere.
Is this recording it?
What if I don't have internet to open the phone?
We have visuals up there, so we can
Got it.
just try your best to get everyone guys all things. Okay, so we're gonna move on to our next term. Okay, so first, I want you guys to try to guess what a high is. Second, so what does it mean? The current trading. You're very close.
In the graph of the stock.
Yes, exactly. So a high is exactly that. It's the highest amount that the stock was able to rise up during that specific current trading day. So as you can see right here on this visual here, that is what the high is for that day. So it's 145.96. So that essentially is the peak of stock on during that current trading day. Very self-explanatory, but it is really important to understand. Yes, only for that specific trading day. It will always change. Well, it won't always change. It's very rare that it will have like the same high, same peak, but it's just for that only that specific trading day. Then I will discuss the Alright. That is the high term. So, now that we talked about high, what do you guys think a low is? Exactly. So it's the least. It's the lowest that the stock has dropped during that specific trading day. Now, on this visual, you can see that the lowest right here. Okay, let's move on to our next term. Okay, open. Can anyone guess what an open is? This is, you can guess kind of. Exactly, the price of the stock when the trade market opens. So, right here you can see the open was 145.47. So that essentially means the alpha stock on that day opened at 145.47. This will all be important in analyzing something called candles, which I will talk about very, very shortly. probably guess what a close is. Yes, no.
At the end of the day.
Exactly, yes. The close is the amount that the stock closes when the current trading day ends. And as you can see, close 126.92. And I'm going to move on here because this term is very, very similar. And previous close is just the close that the stock closed the day before. So, alright. Quick. Yes, and the previous close is what the stock closed at. Alright, so, alright, this is where we get kind of into the spicy stuff here. So, candle graphs, they are a common way. You know, you've probably seen them before, but have no idea what they meant. I'm going to teach you what they mean right now using all these symbols. So, candles can either be green or red. A candle is green when the close was higher than the open, meaning that the stock grew during that trading day. Now, if the candle is red, that means the opposite. That means the open price was higher than the close price, meaning that the stock price was down during that current trading day. A green candle indicates the growth in the stock in that specific day, while the red candle means the opposite. So keep that in mind because this activity I'm going to do, you guys will have to understand that. So,
You can change the parameters of how long a candle reads for, right? So that
you can. I would find out pretty much like the next slide.
Excuse me, where's the trash can?
Trash can is either red or
Okay, so I will now be drawing some hypothetical candles on the board, probably over there. And I want you guys to guess. So, let's say, I'm not sure if you guys are over there, but I'm completely sure where. I can put it like here. Yeah, okay, so. I'm just gonna draw them. I'll draw some like this example here.
I'm pretty sure the camera's
Ethan barely sees
I know that's kind of small, but please try to make it out. So, this is an example of a candle. So, as you can see, I kind of do like some example numbers, and would anyone want to guess what that number is? What this part represents? Exactly. That is the high. Now what about this? This middle one.
just the candle.
Yes, but what term are we talking about? So,
It's a previous open.
yeah, so because these numbers are going up, this means that this is going to be a green candle because these numbers are going up.
And the 13th is coming down, so would that be close?
Exactly. So right here would be the close would be right here.
Where?
This one here. This would be the close.
But isn't the 127 going to below the halfway up?
Yeah. So this is like the. Yeah. So this is the low here. That's the low. Yeah, I'll write the words down for you guys to see.
I'm gonna tell you, I lose my pencil up there. I don't know where they go. And it always happened to be at the
Take a look at that.
Am I dumb?
This is the high, this is what the stock price was that day. What that price was. This is the.
Are you a victim of sexual abuse? I have no one.
Okay, so the open started below the close. That means that the stock grew. So that means this candle would therefore be green. Now you can obviously switch to each one. That would be the candle that would be red. That is just one example. Does that make sense?
Yes.
Is there any questions about this? This is like one of the, I guess, examples. Yeah, I guess.
Wait, what?
Okay, I'm gonna, so as you guys can understand that, I'll draw another one. So you guys can okay, I want you guys to predict whether this is a green or a red candle. Okay. Any guesses?
Green.
For sure.
Oh, no, sorry, red.
Exactly. So, why is it the red? Would somebody like to explain why? Austin.
The close is below the high.
Exactly. So,
Not high open.
what does an open mean again? Somebody refresh.
Price of the stock is going to trend down.
That's when the stock opens. Correct. So, what is the close? Exactly. So, if the stock opens at a price where is higher than the close, then it would therefore down, right? This would be red. Now, what if I did this? What if I switch them around? What would it be? So, if I switch them those around, what color would the candle be? What color would the candle be if I switch them around? Exactly. Because it opens at a lower price than it's closed. Therefore, the stock is that is just the basics on candles. Obviously, that's the high and that's the low. When the stock looks like this, it essentially just makes it that the stock is very like suicidal. Up and down will go on. This is straight up. You can't drop it. Alright, so we're gonna move on. Our next topic is going to be indexes. Okay, so what do indexes do? They're essentially just a kind of value that you can use to like measure how, I guess, well the stock market is doing. In short, it is essentially something to use, that investors use to compare things relative. I can answer. Yeah, so it's just like a relative, yeah, it's just a relative kind of measure of what's
better than this if you did.
So, one of the most common indexes is called the S&P 500. So, this index is a very famous index that essentially tracks the top 100 companies, public companies in the US, and it puts them into a kind of like an average share price. So, you may hear the term of investors beating the market in their investments. This essentially just means that their return is more than what the S&P 500 is. And you can actually invest in indexes. So as you can see, this index has been pretty much extremely like, on this growth. It just keeps growing, right? So you can essentially, this one strategy that a lot of people use actually is just to put a bunch of money into index funds. After 20, 30, 40 years, you have like basically a lot more money than you initially invested because this is something that's probably not for the ground. Another index is called the Dow Jones. You guys also have probably heard this, like obviously and stuff. This is essentially just the prices of the top 30 most traded stocks on the New York Stock Exchange. And this is one note is that it is price weighted, meaning that the higher the price of the stock is, the more weight it will take in the actual Dow Jones kind of industrial average. So once again, it's been on a pretty steady increase. So did you guys notice any similarities between the two graphs? Yes, they're going up. Exactly. Alright. Pretty much consistently going up. Now, you can tell, like I said before, you should invest in index funds, and in the long run, you will probably most likely earn.
I didn't know that word.
Now we're going to talk about brokerages.
Exactly. So what are brokerages? Brokerages are essentially just a platform that we use to trade, buy, sell, stocks on. These platforms range greatly from the pros and cons, and we're going to take a closer look into two brokerages specifically, Robinhood and TD Ameritrade. So Robinhood, a lot of you guys have probably heard of it, and some of the pros is that it's very simplistic. You can trade with zero commission, and you can also buy fractional shares. Fractional shares are just essentially fractional shares. Like you can buy a fraction of the shares. So essentially, if you want to buy Bitcoin, most of us don't have enough money to buy a single share of Bitcoin, which is like $40,000-$50,000. However, on Robinhood, you can buy a fraction of Bitcoin. So if you only have $100, you can put that in. So some cons, they have a lack of analysis graphs, and they also have a bad rep because for GameStop, and we will talk about that in later meetings. And they have like limited. So TD Ameritrade. Some pros of this is a very popular one because it's pretty solid. Free research. We trade with zero commission, just like Robinhood, and they have a good customer support system, and so is free. However, they do not offer fractional shares like Robinhood does. So.
All right, now we're moving on to the tip and final activity.
Okay. So, you may or may not be wondering, well, Andy, how do I implement these strategies in order to actually look at specific stocks? Well, you have to look at software analysis tools. So, one that I use myself is called Lumu, and it is a free one, and it's very, very extensive. And I'll just show you guys some visuals up there. So, alright, so this is the main menu visual. As you can see, there's a lot going on. However, you can see that they do offer like a variety of different stocks that you can look at. All the info that we talked about, the high, the low, the close, all of that, also listed here. And they also have candle graphs and also 24-hour 5-day ranges and 2-month. It's very, very expensive. Obviously, it might get a little overwhelmed at first, but if you guys are interested in this, you can explore different softwares. And this is one of the candle visuals. As you can see, this is exactly what I was talking about before. Green candles, red candles. And the peak being the high, the top line there being the, if it was green, it would be the close. If it was red, it would be the open.
How do the highs and lows like match the opens and closes? Each one's a day.
So you're essentially saying like, how do you know, like
If it opens here and closes here, why are there highs and lows if it's
yeah, so
restarting each
during the
day?
day, that would be during the day. So a peak here, right here, would be during the day. It didn't close, it didn't necessarily close it. You might see candles like this actually, sometimes. Okay. You might see actually candles like this. Essentially where if this is a green one, then it actually closed at the top. Right? There's also candles that are also shaped like this. Which essentially means that the peak, that it closed here and it closed at the lowest price. But these are generally very rare, but that is essentially, so all this fluctuates during the day. It's not necessarily when it opens.
So like the little lines means it like it was still no change happened until it closed.
Yeah. And then this is something that they also offer is the F10 visual. Here we're actually looking at Google. As you can see, you can actually see what major, I guess, hedge funds and all of the big boys on Wall Street and what they have and what stakes they have in their specific company. That's also very interesting. There's a lot of information about their profile, what they do, what the company does, if you can look at that as well. So main takeaways, we explored what blue chips are, the highs and lows, open and closes, also looked at candles and what they mean. And we also talked about how indexes are just essentially ways to kind of have like a relative number to know how the stock market is doing. Various brokerages have various pros and cons that you should take into account. And finally, use stock analysis software like Moonwood to analyze the stocks if you are interested